Welcome to our Step 4 video of the CLX Way lender management. In this video, we are going to discuss the three primary parts of lender management. The first is lender sourcing, the second is receipt of term sheets, and the third is lender underwriting and eventually a lender commitment letter. Once we complete our internal underwriting, we then take your loan out and source lenders. And we take the loan to those lenders who we think are going to be a best fit, not only individual lenders and institutions, based on geography, based on industry, based on loan type. Those lenders that we know from our experience are going to be the best at getting your loan done. If you're doing financing like SBA financing, I want you to know that we only work with SBA lenders that are PLP approved, meaning that once the loan is approved by them, it is automatically approved by the SBA. So you don't have to worry about getting the loan both approved by the bank and the SBA. If you do a loan that's an SBA 504 loan, in which case you need a certified development company or CDC to also approve the loan, at the same time we go out to bank lenders for your loan, we're also going out to the CDCs to get the SBA approval done at the same time. So we don't waste time and you don't lose time when you work with us on SBA 504 lending. Once lenders review our detailed underwriting, they typically get back to us and let us know if they're interested in moving forward. Their main indication that they are interested in moving forward is by issuing a term sheet. And a term sheet is just a summary of the terms under which the lender is willing to potentially make a loan to you. It is not a guarantee that they will approve the loan, but it is terms under which they would approve the loan if they get to that stage. We do not push our lenders to get us term sheets quickly. Of course, we do appreciate term sheets when they come in quickly, but our goal is to get you accurate term sheets. All of our lenders are required to run the deals that we send to them by their credit manager, loan committee, whoever it is that is going to be involved in making the credit decision. Because of that, we have a 95% success rate of our term sheets turning into bank commitment letters and final approvals. Of course, absent something coming up in underwriting or some change in financial condition that was undisclosed. Once we get your loan out to our lending partners, please be patient. We will get back to you with an update on where it stands with the lenders just as quickly as we can, and hopefully we'll have some terms to share with you shortly. It is possible in this stage we may get some initial lender questions before they issue terms. It's important to get back to us promptly on these questions because that will keep the process moving. We don't want to delay in getting back to lenders and have them turn and focus on another transaction. Any questions we get in the process is because the lender wants to fully understand the deal and be sure it is a deal that they can get done. Again, we're looking for term sheets that we can get approved, not just term sheets for the sake of getting term sheets. The second phase of lender management is receiving your term sheets. Congratulations, you now have some terms. Please keep in mind, term sheets are not final. There's always room to negotiate. If there's something you don't like on a term sheet, we can go back to the lender and try to get something better, whether it's interest rate, term of the loan, amortization, prepayment penalty. Just about anything can be negotiated on the terms, with rare exceptions. I mean, if you're getting an SBA loan, as an example, some things are set by the SBA policy. But in general, most of the terms on most term sheets can be negotiated. So if there's something you don't like, let us know and let's try to fix it. If we have multiple term sheets from different lenders and you like something in one term sheet but don't like it in the other, let us know. We can go back and try to negotiate those lenders against one another and try to get you the best deal possible. At this stage, we're also going to have excellent feedback from our lenders. Maybe you don't like any of the terms available, and maybe that's because there's some issues with your deal and we need to try to find a way to restructure your deal, or maybe go out to a different lender or a different type of lender. This is the time where we can have that discussion and make that decision. So again, if the terms aren't exactly what you wanted, don't panic. There's some options available still. If you are interested in moving forward and accepting the terms you've received, most lenders require you to sign the term sheet and return it to them. There are some lenders that will require a deposit with the term sheet. This is very common with SBA 7A lenders. They almost always require a deposit, and that's because there's a lot of work that goes into underwriting an SBA loan, and they want to be sure you're committed into moving forward with them once they start that work. Please keep in mind with all of our lenders, the deposits are refundable if the deal falls apart or the lender doesn't approve the deal. The only cost you may lose is anything that they've actually spent money on. An example of that might be a credit report or a background search, and the cost of those is relatively minimal. Now, if we have engaged a lender to order the appraisal in advance, then you could be out the money for the appraisal as an example, but typically those items are not ordered in advance without your approval. So a majority, if not all of that, initial deposit will be refunded to you if the deal does not go forward. Once you've accepted the term sheet, we then move on to the next stage, which is lender underwriting and then final lender commitment. Please keep in mind, although we have already underwritten the deal in-house, all lenders are required to do their own underwriting. The fact that we have already underwritten the deal will put the lenders ahead on the path to getting the deal underwritten because they're already going to have a lot of details and a lot of financial information organized in the format that they need it to be. But they still need to go through their own process. As they go through this process, they are going to have additional questions and additional documents they may require. Sometimes these documents may be forms you've already completed, but the lender requires them on their specific form. Sometimes it's additional paperwork, like with SBA 7A loans, where there's specific 7A paperwork that needs to be done, but we really can't do that paperwork in advance till we know what the final terms are with the lender and we know which lender's moving forward with the deal. Also in underwriting, lenders are going to ask detailed questions. Some of these questions are going to be very personal. Some of these questions will be about background and history. And unfortunately, it's just stuff you have to answer as part of the loan approval process. If you are doing a loan for any sort of SBA or government-backed financing, there's going to be a lot of ancillary questions that need to be asked. Loan presentations that lenders have to submit for approval on SBA loans typically are 40, 50, 60 pages in length. The SBA requires a lot of detailed background information and a lot of questions to be asked. A lot of time these questions just need to be answered. They're not going to be material to the credit decision the lender's making. They're just really trying to document their file to meet the SBA criteria. The quicker you respond to us with answers to questions and additional documents requested, the quicker we can get your loan through underwriting and get it approved. If we go an extended period of time without getting answers, it's likely a credit analyst is going to put your file to the side and focus on those files where they have everything that they need, which could just delay the process once we get them the paperwork. So again, the quicker you get us this information, the quicker we can get you to an approval. If you're not sure what to do and you need assistance, please lean on us. We will do everything we can to help put these forms together for you, to help you answer questions, whether it's preparing projections, completing forms, answering questions. Give us a call. We are here to assist you and see that the process goes smoothly. Also, we ask that you filter all financial documents through us. That way we can double check them and verify them before we send them on to the lender. If something's inaccurate or there's a mistake, the last thing we want to do is give the lender the wrong information because it could cause a loan to get denied in underwriting that otherwise would have gotten approved had they just had the right information. So again, please filter all your documentation through me and our staff, and we will review everything prior to forwarding it on to the lender. Prior to issuing an approval, don't be surprised if a lender wants to do a site visit. That site visit may be to your existing business, it may be to a business or a piece of real estate you're looking to acquire. A lot of lenders are required not only to meet the borrower in person, but also to have kicked the dirt at the facility or the business that they're looking to lend against. And this is actually a good thing because it gives you an opportunity not only to meet the lender, but to pitch yourself, your experience, the property, and the business, and help get them even more comfortable. The more knowledge that they have, the more comfortable they are. When they go in for approval, the more likely the transaction is to get approved. One other thing you have to understand is the approval process at different lenders may look very differently. At some lenders, it may be one individual who has to sign off and approve your loan. At other lenders, it may be multiple individuals. And sometimes the loan has to go to some sort of committee that needs to sign off on it. That committee might meet in person, it might meet digitally, it might be by email. There's a lot of different ways these things can get done. So we ask that you're patient. We will fill you in on the process for each individual lender, as it does vary by lender, and let you know what you can expect during that process. Typically, once a loan does go in for approval, there's really three things that can happen. First, the loan can get approved, which is the best news we can get. Secondly, the loan may be tabled. What tabling means is that the loan hasn't been approved, but it also has not been denied. Usually a lender will table a loan because there's additional questions or additional information they need to gather. Once they've gathered that information, they will take that loan back through their process again to try to get it approved. A third thing that can happen is a conditional approval. Under a conditional approval, a lender may go ahead and approve the loan, but they're not ready to issue the commitment letter. They've approved it conditionally based on receiving some additional information. Unlike the previous step, the loan is approved, but they won't actually issue the commitment until they get some questions answered. And lastly, in worst case, on occasion, loans do get denied. Again, we have a 95% plus success rate of our term sheets turning into loan approvals, but that doesn't mean from time to time things don't come up and a deal does not get denied. Once a deal is denied, that is not the end of the day. Please keep in mind, we have a plethora of lending resources and we can find another lender, or it may even be possible to rework the deal with that existing lender that just denied you. So don't hit the panic button right away. Let's see if we can find another solution. The last part of the approval process to actually be issued a formal commitment letter from your lender. What a commitment letter is it's an outline of all the terms of the loan exactly as it was approved, as well as what's required to get from that commitment to a closing. Some lenders are very detailed and provide every document needed in the commitment letter to get to closing. Others provide a general summary and then you get a closing checklist later, which we'll talk about in more detail in a later video. Once you get the commitment letter, please keep in mind that doesn't have to be your final deal. If there's some issues or concerns you have with the commitment letter, we can always go ahead and try to renegotiate it. Maybe it's a business purchase and the purchase price changes, or the final purchase contract changes. We can go back and work with the lender to change it. Once you have a commitment letter, it's much more likely we can get a change done because the lender's already on board. They've already approved it. They already now have it on their list of deals to fund. So they're more likely to work with you to get something tweaked. Once you have a commitment letter and you're ready to accept it and move forward, you will need to execute that commitment letter and we will get it over to the lender. Almost all lenders are going to require a deposit with the commitment letter. Under some loans, if you've already made a deposit, that deposit may become a hard deposit now under the commitment letter. Almost all lenders are going to require a deposit with the commitment letter. That deposit is going to be used for third-party reports and other costs involved in getting your loan from approval to closing. Now, if you made a deposit with the term sheet, that deposit is likely going to get credited to your commitment deposit and may cover your commitment deposit and no other deposit will be needed. But please keep in mind, most lenders are not going to move your loan from the commitment stage to the path to closing until they receive not only the signed commitment letter, but also the deposit. Congratulations again on being to a point where you've gotten a commitment letter. Please watch our next video, Path to Closing, where we'll discuss what it takes to get from a commitment letter to a closing. Thank you.